The bank knows how much you are worth before anyone says hello. You walk through the glass doors with a paycheck in your pocket and a balance of $47. The floor shines. The cameras blink above you. A line of 12 people waits behind a rope, holding envelopes, debit cards, and quiet frustration. You are not a client yet. You are traffic. At the counter, the teller smiles with tired eyes and asks for your ID. The screen decides the mood. One red warning changes the temperature between you. A $35 overdraft fee appears, then another, then a third from a coffee you bought 3 days ago. You explain. She nods. Her hands stay on the keyboard. The answer was already written before you arrived. At this level, the bank does not negotiate with you. It waits for you to make a mistake. And the smaller your cushion, the more expensive the fall becomes. Then payday comes. Your phone lights up at 3:17 a.m. with a direct deposit of $1,286.42. For 1 second, you feel safe. Then rent leaves. Then insurance. Then the old fee you forgot about. By lunch, the number is thin again. The bank sends you a friendly email with blue letters and a smiling family. You are pre-approved. It feels like a door. It is a hallway. A credit card arrives in the mail with a $500 limit and a 29.99% APR. The plastic is shiny. The trap is quiet. You buy groceries, gas, maybe a pair of shoes for work. The minimum payment is $25. It feels manageable. That is how the machine lowers its voice. It does not crush you loudly. It teaches you to accept pressure as normal. Now your balance grows. Not rich, just stable. Maybe there's $4,800 in checking and $12,000 in savings. The line at the branch looks different now. You still wait, but less fear sits in your chest. The teller offers a money market account. The banker behind the desk waves you over. There's a small office with a fake plant and 2 chairs too low to be comfortable. He prints a brochure. He circles numbers with a black pen. The interest rate is 0.40%. Inflation eats more before breakfast. But the bank has changed its face. You are no longer a problem to manage. You are a product to sell. The emails become warmer. The app offers personal loans. The credit limit rises to $3,000 without you asking. Nothing about you became more magical. You simply became less dangerous to them. Then you reach the next room. Maybe you have $75,000 saved, a 740 credit score, and a mortgage application open on a laptop at midnight. Suddenly people call you back. Not instantly, but fast enough to notice. A loan officer named Melissa leaves a voicemail using your first name twice. She says she can walk you through options. Options are what banks call doors when you can afford the handle. You sit across from her under fluorescent lights, signing forms with tiny boxes and dangerous words. The bank studies everything. Your W-2s, your tax returns, your bank statements, the 18-month subscription you forgot, the $600 cash deposit from your uncle. Your life becomes a stack of PDFs. Melissa is polite, but the computer is not. It measures you without embarrassment. If you pass, they hand you hundreds of thousands of dollars and call it trust. If you fail, they call it policy. Then the wealth changes shape. You sell a company, or inherit a house, or spend 20 years saving while everyone else thought you were boring. Now there is $500,000 in liquid assets. The branch manager knows your name before you reach the door. The coffee is suddenly offered. The waiting room disappears. You are taken to a conference room with a long table and a glass wall. A man in a navy suit brings a folder with your name printed on the front. He does not talk about overdrafts. He talks about your goals. The bank has discovered your dreams. It asks about retirement, children, taxes, risk tolerance, and legacy. The words are softer now. The fees are better dressed. A 1% advisory fee sounds harmless when spoken beside a leather chair. But on $500,000, that is $5,000 a year. Every year, whether the market rises or falls. The poor pay when they slip. The comfortable pay when they listen. And the wealthy pay because the bill is hidden under service. Then comes private banking. The door has no sign. The carpet is thicker. The air is quiet. You do not stand in line because lines are for people whose time is cheap. You have $2 million, maybe $5 million, maybe more spread across accounts, trusts, and investments. A private banker answers on the second ring. Not a call center. A person. If your card gets declined in Paris, someone fixes it before dessert. If you need a mortgage, the rate bends. If you need cash, they offer a securities-backed line of credit. You do not sell your stocks. You borrow against them. The interest rate is lower than what a school teacher pays on a used car. This is where the rules begin to loosen. Not disappear. Loosen. The same bank that charged $35 for being $4 short now offers millions without touching your principal. The difference is collateral. Collateral is the word banks use when they can sleep at night. At $10 million, the conversation changes again. Now the bank is not protecting itself from you. It is protecting you from other banks. Invitations arrive on thick paper. Golf weekends. Art dinners. A private room above a stadium where nobody mentions the price of the seats. Your banker asks about your daughter's college plans and remembers the name of your boat. This is not friendship. It is memory as a business model. They bring in estate attorneys, tax specialists, insurance strategists, and investment teams with polished shoes. They show charts. They build structures. They say efficiency when they mean fewer taxes. They say planning when they mean control after death. And for the first time, the bank is not trying to make money from your mistakes. It is trying to make money from your complexity. But the final level is different. Billionaire banking does not look like banking at all. There may be no branch, no brochure, no waiting room, no plastic pen chained to a desk. There is a jet at Teterboro, a midnight call, a discreet meeting in a hotel suite in Singapore, a family office with 12 employees and one locked server room. The billionaire does not ask for a loan. The bank competes to lend. A painting becomes collateral. A stake in a private company becomes leverage. Future cash flows become today's spending money. Debt stops being a burden and becomes a tool with a velvet handle. The richest client may pay less to borrow than a nurse with perfect credit. Not because the bank is kinder, because the bank is safer. To the bank, money is not morality. Money is gravity. The more you have, the more the room tilts toward you. And somewhere on the other side of town, a man stands at an ATM at 11:46 p.m. He checks his balance before buying gas. The screen glows against his face. Available balance, 12/18. He presses cancel. Behind him, the same bank is arranging a $40 million credit line for someone who will never touch the money. Both customers are using the same institution, but they are not living under the same rules. One is charged for needing money. One is rewarded for already having it. That is the quiet secret behind the marble floors and polished smiles. Banks do not treat you according to who you are. They treat you according to how afraid they are of losing you.